This is Dr. Duru from Ahan Analytics with the market breath. As I promised, more content from the crazy week that we had last week. There was just too much going on and the video already got so long. This is the part where I show you how I use SwingTradeBot in such a volatile stock trading environment to identify key trading candidates. And in this case, I was looking for bullish candidates because of the dramatic turn from overextended selling conditions. Let me take you step by step through what I'm going to show you. First of all, I'm going to pull up SwingTradeBot. It's a stock scanning tool that I like. It's my favorite. I'm a subscriber. Show you how I use the scan to identify the first wave of candidates, go through some filters, look at the top candidates from that filtering, take it over to Seeking Alpha, where I apply some fundamentals. And I'll explain in the video why I wanted to use some fundamentals as a part of this filter. Usually, I'm just focused on the technicals for swing trade candidates. And then finally, I go into the stock chart for some final checks, sanity checks, and also to avoid stocks that have earnings coming right up. All right, let's go ahead and dive right in. This is the stock market recap for Friday, February 6th. I'm recording this on Monday, February 9th. That's an important distinction that you'll see later on. And what popped out immediately to me is the preponderance of this setup or signal called the 180 bullish setup. And it showed up across all of the indices except for, of course, the NASDAQ, which is still bearish. And you can see it's bearish because it's down midterm and on the short term time frames. All right, so I really was curious about what is this 180 bullish setup. I don't think I've really used this scan before. Let's go ahead and dive in. So I just go ahead and click on the signal and I get the scan. Here's a description. It's a set of rules from hit and run trading. In fact, SwingTradeBot has incorporated a lot of interesting trading rules from hit and run trading. And I will show you what really caught my eye about this. And I have to go to TradingView actually to give you a quick, really close view of this. Is on the NVDA stock chart. There were a lot of, and I know I just said tech was bearish, but some tech is actually made it back into bullish territory. NVIDIA is one of them, ticker symbol NVDA, and this happened a lot. This deep selling, and actually NVIDIA selling wasn't all that deep, but you can see it went below the Bollinger Band. And remember, the Bollinger Band in this case represents about 80% of the expected price volatility. And right here, the sellers really got themselves overextended. In fact, NVIDIA almost tested its 200-day moving average for the first time. It hasn't even touched it since May of last year. So that would have been a big moment. Anyway, the next day, this gap up left behind this last candle. Sometimes I like to call this a bear trap, and you can see there's some wicks, so it's not a really clean bear trap because the gap higher sellers did bring the stock down a little bit before the rebound, but still the general concept applies. And I saw this on a lot of stocks, and I knew that this had to be a scan. And sure enough, the 180 bullish setup caught a lot of these stocks that left behind a bear trap. So what I could do is just to look down on the scan and see how many stocks are caught. 70, that's way too much. And let me just make sure, yep, February 6th, way too many stocks. I want to filter this down. I like to keep my minimum average trading volume to 200,000 shares, minimum price of $10. And then I also go into the advanced filters. I don't want stocks and ETFs, particularly because there'll be a lot of overlap. And I also want to get stocks that are above the 200-day moving average. I really want the most bullish candidates. I'm going to use some discretion about the 50-day moving average, but sometimes I'll be even more strict to restrict the stocks to above the 50-day moving average. Almost never use the other faster moving averages. So now I can filter down, and I want to filter as charts. And I like as charts because I can do a really quick visual view. And actually, let's just scroll all the way down to make sure that I did indeed filter this down. Yep, there's only now 8 pages of stocks. Let me show you just what I do on the quick visual scan. What I like to do is just to go real quickly and see, yep, that meets the criteria. I like to check the sector or the industry. There's some that I don't like. So I'm just doing a quick visual check to make sure that this scan is doing what I think it's doing. So yes, that meets the criteria. A ticker symbol AEHR, ticker symbol ALH. Let's keep going down the line. ALKS, ALM. So let's find some that didn't quite meet my criteria. So this one, AMPH, healthcare, drug manufacturers. I'm not really all that interested in those. Also, it stopped short of resistance from a previous peak, and also is actually down on the day on Friday. So I'm actually surprised that the scan caught that. So this is kind of the quality check that I want to apply before just automatically taking everything. Healthcare again, a ticker symbol APLS. It's just kind of it's struggling to get above its 50-day moving average, so I really don't like that one. Doesn't make the list. And then there might be some uh, industry things that I'll exclude. And I think I saw, yeah, like real estate, I'm not going to buy into right here at this juncture. Utilities, I'm not going to chase those. And if there's any oil and gas, let's go to the second page. Oil and gas, I'm also not interested in. That should show up coming up in one of these. Yeah, there we go. CNQ, energy, oil, and gas. So I go through all of these. I do a quick visual check. Now, normally what you would do if it's just a few stocks, or what I would do is just a few stocks, I would click this watch list button and I would add it to my bullish watch list. But in this case, there's a lot of stocks and I really don't want to have to click one by one by one. And this is actually a feature request I'm going to make of SwingTradeBot is to change this so that I don't have, for long lists, I don't have to go through this long watch list. Even if I go to find stocks, if I just go back to the list, right, it still is a click by click by click. It would be great to just have a checkbox on both this list or on the charts list. But anyway, let's keep it moving. What I did is I just wrote these down. Yep, old school, wrote it down. I know, not digital, back to the analog days. And of course, as I'm thinking, working through this, some of you who are really advanced traders are thinking, gosh, just make an agentic workflow and it'll all be done for you. I would love to make an agent that's a part of SwingTradeBot. That would be such a powerful feature. And I'm going to mention that to my friend who makes this software platform. But for now, there's going to be a little manual steps. My API integration is my hand. And I wrote down the stocks. And the reason I wrote them down is because I wanted to put them into my Seeking Alpha portfolio. And it's not really a portfolio, this is a watch list. And I wanted to apply some fundamental filters. And the reason why I want to apply some fundamental filters is that the market's very volatile. And I'm trying to get to the strongest of the strong. And that means I want to look at revenue growth, EBITDA, and EPS growth. Right now, I created this growth view, and right now it's sorted by alphabetically, so that doesn't help, of course. So I start here with EPS growth forward. I'm going to go forward and look at the top ones. I went, I think, down to the top 9, wrote down some symbols on my little pad, and marked down the ones that met the top 9 criteria. Then I went to revenue, forward revenue, the top gainers in revenue, the top 9 there. There was some overlap on those. And then finally, I said, well, just in case I'm being overly restrictive, let me also just look at those stocks that have strong EPS growth year over year. And then I wrote down those. And if there were some overlaps, some stocks, of course, overlapped in this list, then I would, they would be double, triple candidates for actual buys. So after I did all of this, I also looked at just from my own familiarity, what kind of stocks I met my industry interest as well. And I came down with just a few stocks to take a look at. Let me take you through them. The first one was RXO, ticker symbol RXO. And I actually violated the rules. In fact, you're going to find that I actually violated the rules for the 180 bullish setup several times. Now, RXO met both my earnings and my revenue forward growth filter. So I jumped a little ahead in terms of buying. You're not supposed to buy until 10 cents above the previous or the high of the day. So for instance, for RXO on February 6th, its high of the day, intraday high was 1743. So I should be buying no lower than 1753. RXO made it stop short. Actually, it didn't even get positive above that, and then it fell down 5% on the day. So my bad for jumping in so early because on paper this looks so strong, but on the technicals it did not really trigger. Moreover, I did notice some news that some cautious report, I think it was a short seller report, came after this stock. So my time in the stock is likely not to last. I've already violated, I think, the $1 stop loss for the 180 bullish setup. Next, I went on to Flowserve. Flowserve is one that I did buy, and it did go 10 cents above the previous high. But the thing that makes me a little uncomfortable is that it's above also the upper Bollinger Band. In this case, upper Bollinger Band describes about 80% of the price volatility. And but I do like it because it just reported earnings. Remember, I'm trying to avoid stocks that have earnings coming up, but I really like the ones that just reported. And the stock is looking pretty strong post earnings. So I'm going to give this a little bit more leeway. And I also still have a clear stopping point right below the low of that day. So I went ahead and bought that one. We'll see what happens. StoneX was another one. I also violated the rules here and went ahead and bought. It did make the 10%, it got 10% above the previous day's high, or sorry, the day's high, and I had to chase it a little bit. I think I bought around 123, but you can see overall the stock has been on a very strong run, hasn't really taken a breath, and it's due now to take a pause because it's trading well above its upper Bollinger Band. So that's a little shaky, so I didn't buy as many shares as I want, and I'm also going to violate the trading rules in terms of I'm going to allow this to come down as far as the low of this down day before I stop out, if I do have to stop out at a stop loss. All right, we're rounding the bend here. The next buy candidate I came up with was ticker symbol AMCR. I did go ahead and buy this one. This one, it looks the best of the bunch, but again, it's really high off of support. And as I'm going through this, I'm thinking um, another filter I'll apply in coming days or next time I try this is to say, give me stocks that are only like 1 or 2% above key moving averages. So I don't have to go through this wringing of hands that the stock is so far above key moving averages, like the 200-day moving average is the blue line, the 50-day moving average is the red line, the 20-day moving average is the dash line. And that puts this, a pullback is a very high probability with these kind of setups. And then finally, the last one that I bought that I will show for the day is actually one that I did not buy, but I really, really, really looking closely at it is Carnival Cruise Lines. This was interesting. It didn't make the buy. You could see it gapped down, so it obviously didn't make the 180-day bullish setup. But CCL, this is Carnival Corporation, ticker symbol CCL, cleared a major hurdle. All of these previous highs, so it's looking pretty good overall. So I'm going to keep it on a buy list, but it doesn't qualify as the 180 bullish setup. And then one last one that I really liked, but I can't buy it because I think earnings is coming up, is the Chef's Warehouse. I just like the concept. Earnings are coming up, so I don't want to buy it. But if I pull back, this stock looks like it's ready to rip much higher. It's been choppy a lot, but then it goes into these strong streaks. It's been choppy since last spring, over almost a year. So it looks like the momentum is starting to build, but earnings may have to provide that catalyst. All right. Thanks for checking this out. Again, this is Dr. Duru with the AHA Analytics with the market breadth. If you have any comments or feedback, put them down below in the comments section, or sorry, in the captions. Share and like this content so the algorithm knows it's up, and that will help support this channel. And you, of course, can subscribe if you want to get timely alerts on content like this in the future. All right. Thanks for checking this out, and talk to you later.